Record. Okay, so when it comes to my trading style or how I trade, it's quite simple. I just look now, I I just look out for um three basic things. I look out for um structure, structure, um, let me spell structure again. Structure, liquidity, and then key levels, key levels. So these are like the three major things I trade. This is basically the three things I look out for when I'm trying to trade. Structure, that is trying to understand the bias of the market, what the market is tending to look like and all of that, and then liquidity and of course liquid key levels. So when it comes to this, well, this is what I do. And for me, I can trade, like I told you, I literally can trade any any time zone. I mean time frame. I don't have to be on it has to be monthly time frame. It has to be 4 hours, 1 hour, 15 minutes. In fact, I barely don't even trade on the lower time frame. I prefer to trade on the higher time frame. Sometimes I don't really go as low as 1 hour, 4 hours, 1 hour. If I come down a little bit, then I come as low as maybe 30 minutes, right? But it's just recently, in fact, I'm just trying to study. It's just when I was doing some few studies now, I began to look into some confirmatory form of entry on lower time frame, like 15 minutes and the likes, to just see what it looks like. But I've never really traded for a long while. I've never really traded on the lower time frame. So, this is it. When it comes to structure, let's say we are on the, where's pen now? Let's say we are on the, where's this pen? Pen. Let's say, let's use this. Let's say we are on the 4 hours, or let's say we're on the daily, let's say daily. So when we on the daily time frame, we look out for what? We look out for key levels. There are levels called key levels. You might not be familiar with it, but of course, when we get to the chart, I will show you examples of key levels. We have different key levels, right? We have the A shape, we have the oh sorry, what's wrong? We have the A-shaped key level, we have the V-shaped key level, and then we have the open close key level. Open close key level are those levels where maybe two consecutive buy or consecutive sell candles where they form and create a gap in between them, and that gap become the open close level. So what I look out for is maybe let's say for example on the daily time frame we have um, an A-shaped key level like this, right? And then let's say the previous day candle um came tap into that daily key level and then closed by rejecting it, right? Once it closed by rejecting it, the next thing I do is, that's on the daily, I just come down to like my 4 hours. And coming down to the 4 hours, I want to see some form of maybe a breakout. I want to see like a breakout or a sweep and a break, right? A sweep and a break. So once I'm able to see something like this on the 4 hours, then I want to come down to like the 1 hour, right? I want to come to the 1 hour to see. So if I'm seeing like a sweep and a break on the 4 hours or just a breakout on the 4 hours, if I see a breakout on the 4 hours, I want to see a sweep and a break on the 1 hour. If I'm seeing a sweep and a break on the 4 hours, I want to see that sweep and a break on the 1 hour, apparently with an inducement. With an inducement. So once I see these three things happen, I am ready to pick my trade. So this scenario is for like a bearish scenario where market touches a maybe a A-shaped key level, closes below, or a V-shaped key level. So in a case where I'm seeing a V-shaped key level, market is closing above it, then I want to come to my 4 hours and look out for a breakout to the upside or a sweep and a break on the 4 hours. And when I'm seeing this on the 4 hours, I want to come down to my 1 hour, and then I want to see if it's a breakout. If it's a breakout, I want to see that sweep and break on the 1 hour. Or if it's a sweep and break on the 4 hours, I want to see a sweep and a break with an inducement on the 1 hour. This is the logic to which I used to trade. I try to keep it this very, very simple, right? This very, very simple. I don't want to always complicate it. I just want it to be as simple as possible. So let me just get this guy cleaned up. So because trading should not be complex, because the idea about it's already complex. The concept is already complex, right? So trading it should not be made complex again, right? We should try and look for a way we can just come approach the market in a very easy way and make a good fortune out of it. So um let's move straight to the chart. Let me look for a plain chart. So this is GBP, okay? GBP card. We are on the daily time frame, right? This is GBP card on the daily time frame. So let's try and investigate this. So now, I was talking about, and of course, I use the line chart a lot because the line charts mostly help to identify those levels. Like this now, this is a A-shaped key level. You can see those turning points. You see this A-shaped key level. This is a V shape. This is a V-shaped key level, right? This is A-shaped key level. This is a A-shaped key level here. This is a V-shaped key level. You can see those turning points. Those are because these turning points are very key. They play very important role in the market. They are not just there. They are not just fancy rules. They are points where markets are reversing. Because market got here, then it reversed, go back here, then it reversed, gave us this V shape. So those points where markets are reversing, they are not just random points in the market. They are positions in the market where there are some certain intentionality, buyers, sellers in those regions in the market. Because why would market have just reversed from this point if there was nothing here that made it come up? Why will market reverse from this point and come down if there was nothing here that made it come down? So these regions are not just random regions. So that's why I refer to it as key levels, because they are key because they are levels where some persons created a reaction in the opposite direction. From here now, somebody pushed the market down. We don't know who, so definitely some persons were here. So for it to have moved down from this region, some persons were there. We can't joke with whoever or those who are here. They are strong enough to have created this move. The people that created this move to the upside from this region, we can't joke with them. So all of those key levels, we can't joke with them. Not especially when those levels are now overlapping with a zone where there is a form of rejection. For example, look at what happened in this case now. Look at this key. Let me remove this one. Did you see this key level, right? Look at this key level. Market came into this key level on the daily time frame and did what? Closed below, right? When we see this happen on the daily time frame, we want to go and investigate this now. Then we'll go to the 4 hours. This is our 4 hours. What do we have on the 4 hours? This is the rejection that we had, right? Line chart. What do we have? C, a breakout. We had a breakout. Line chart might not be so clear, but see a breakout. In fact, looking at it just from here on the candle charts, did you see this already? We had a breakout, and after having this breakout, this first candle closed below this zone. And what happened? The next candle that opened came, tapped into that key level, because it's under key level again. You see that? Tapped into this key level and immediately began to do what? Sink down. And even if I'm going to be trading it, because so now, market is fractal, remember. So if the same thing I'm saying from the daily 4 hours and moving down to the 1 hour, let's check. Let's check the 1 hour and let's see what happens on the 1 hour. What do we have on the 1 hour? Now we have a sweep, a liquidity sweep, and a break, first break, second break. So where do we have an inducement? Where do we have an inducement? So this is where our storyline idea begins to come in, where we begin to investigate the market and observe what was the market doing. So we had this guy, the first breakout here, a sweep and a break. Coming to the candlestick, we have that sweep, we have that break here. This guy closed below. This guy came, tapped into this V-shaped key level here, rejected. On rejecting from this guy, yeah, you see these two consecutive close candle, right? This is what I call an open close key level, because those levels too are very important levels like this, especially on the higher time frame. They are very key too. They are very important. See how market came into that zone and sold. So those key levels, the A shape, the V shape, and open close key levels, we don't joke with them. So look at this guy. He came closed below. This guy also came close below. Nothing really interesting so far, because I've not seen an inducement. The inducement we would have used was this guy, but apart from this guy coming, giving us this guy, because I would have wanted to play this guy as my entry position, using this as my inducement. The market did not come to that zone. And this is one key thing you need to also understand. Most times when because market is fond of one thing, when they are going and they want to attack a liquidity in a direction, most times market don't have the enough energy to always come back. So liquidities above them or below them. Imagine market want to attack liquidity on the downside. Most times, market don't have enough energy to go and attack those liquidity that are resting far above before they will attack the liquidity they are running towards. What market always tend to do is they only look out for liquidity that is closest, or key level that is closest to liquidity that is above. They look for the closest one above, attack it, then they continue their position. So if they want to sell, if market wants to sell, market is going to be looking hard. Not like they can, of course, because market is random, market can decide to really come back to this zone. But oftentimes, market don't always tend to come back as far as those liquidity that are resting far above when they want to sell. And when they want to buy, market they don't have much time to attack those key levels that are below when they are buying. They will only look for the closest one to them, attack the closest one, and then they continue in the direction they want to move. So looking at this guy, after we've gotten on our 1 hour, after we've gotten our sweep and a break, we had this guy as an inducement. This guy would have been the first place we would have been looking out to be. Immediately they came, they didn't take out this guy, they just came, took out this key level, dropped. This would have been the next position I would have been looking for, because this guy had given me another inducement. You see how we study it now. And immediately this guy also happened, swept. What did we do? This guy, it didn't come back to this guy. The next liquidity that we had was this guy. So immediately we had this guy as an inducement, liquidity. This open close become the next point. So of course, market can decide to take out all of this and come back to this zone. Yes, it's possible. But oftentimes they don't. Because why? Market is more interested in the bullish direction. Why? Because judging from where we are coming from, What did market do? Look at market closure. Took a key level, closed below. Not just that it just closed below, because the closure it matters a lot. The closure matters. But not just the closure alone, but what? The 4 hour time frame gave us a clarity to it. It didn't just close below on daily. It gave us a what? A breakout, a sweep, and a break. A sweep and a break. That gives us a clarity as to this guy wants to come down. And what did we have? We have this. Looking at it on the 4 hours, you see what happened on the, it didn't even really come back to the guy. So it shouldn't have even activated us. Came close to it and then began to reject. Came close to it and began to reject. But then don't be surprised if the coming week that we are coming into, this guy could become the next inducement. It's possible. This small zone that we had will be the next inducement my price will come into and they sell. It's very possible, right? This is very, very possible. But then let's continue.
But
Yes.
you feel use arrow two, the that's arrow line to annotate, be to point out what you
You mean
using the
something
mouse
you mean
confuse
something like this?
your mouse
Oh, my mouse. Okay, like this.
that the mouse kind of lag. So sometimes your voice is faster than the mouse
Ah,
for my
okay. Oh, you mean is this
so
better this way?
okay, let me see. Continue like
I changed to the arrow now, not the cross. You mean?
or you can use that arrow line, that arrow tool that we used to use to mark change of whatever, whatever. Not the one that you draw like join to. Wait,
Arrow
go to where you get your horizontal line and the likes.
this place?
No, 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 no. Where you get your horizontal lines.
Okay, this one. Oh,
That arrow, then you can stretch it and be using it
okay,
for
like this
the
one, like stretching this way, you mean? Something like this?
no, no, no. Arrow. No, this is horizontal line.
Mm-hmm.
Abby?
Yes, that's horizontal.
No, no. I mean the arrow. When you use arrow instead, that one arrow, not the one that draw like joints.
Wait, I'm coming. If I understand, we have this sort of arrow too, something like this. Not this,
No, that one that you star. No, no, the one that is in your star. I saw it.
the one that is in my star. Let me
Your
check.
favorite, Abby, I did call that pass. That same place that you
This one. This one.
yes, then you can, I don't know if it will work. Maybe it will be easy to for me to grab the point that the play because I lost you when you talked about that place that you're explaining H1 that the market didn't come, but it went. It didn't come, but it went. So the thing was fast. Your voice was ahead of the
Ah,
screen.
okay, okay,
Maybe it's mm,
okay. So, okay. So what I was saying now is, coming to you got the whole idea up to the 1 hour, how we were able to navigate from the daily to the 4 hours to the one,
mm, yes.
right? Yes. So now to the 1 hour, I've shown you how we had the sweep and the break. And then because from the daily, we had seen the daily has given us a projection here, right? Where we saw this um A-shaped key level, right? This A-shaped key level that we have here. We have this A-shaped key level. Market came into it and rejected, right? Closed below. On closing below, we came to the 4 hours. We saw a sweep and a break of structure, which is this. We have this sweep. Okay, we have this sweep, and then we have this break, right? And really we have this sweep and this break. This guy came, sold on selling. We would have wanted to use this guy as an inducement, right? This guy should have been an inducement into this key level, into this key level. This is a A-shaped key level. You see, A-shaped key level would have used this guy as an inducement into that zone, but market didn't come back into it. Rather, market just decided to keep selling. Market decided to keep jumping, dropping and dropping. So on the 4 hours, after market had left this zone, did market come into this key level? Let's see, this open close. Let's investigate this open close. We have this open close key level. Did market touch it? Market didn't really come into this open close key level. It didn't come into market didn't come into that open close key level. So if market didn't come into this open close key level, let's come to 1 hour. Okay. On 1 hour, what did I see? Market didn't come into this open close key level. But then what did I see market do? To the far left, I could see this A-shaped key level. And what did this A-shaped key level do? This A-shaped key level got disrespected, tapped into it here, rejected, came back, disrespected it here, making this key level a zone aligning inside of an imbalance. And of course, remember we had marked out this guy initially as an inducement, right? This guy became the closest inducement, and then this A-shaped key level became the closest key level. It wasn't even this guy anymore. Initially, we were looking at this guy, right? We were looking into this guy, but this guy was no longer the closest to it. This guy was the closest. Do you get it now? This A-shaped key level became the closest to this inducement. So market didn't even bother to tap into this guy. It just came, took out this one, and then what did he do? Boom, to the downside. So don't forget, what are the confluences? If we are looking at it from the daily, we want to see daily reject daily on the daily time frame, close below or close above, then come to the next hour, come to the 4 hours, look out for a sweep and a break or a breakout. There's a difference between a sweep. This is a sweep and a break, and this is a breakout. This is a breakout. So it's either we see a breakout or a sweep and a break on the 4 hours. So if we see this, then we can now come to our 1 hour. If we have a breakout on the 4 hours like this, we want to come to the 1 hour, and we want to see the 1 hour now give us a clear sweep and break. Does that make any sense?
Yes. I do understand that.
Great. So that is how we're able to catch these cells just above the inducement. And funny enough, I know most people are always scared of placing trade on higher time frame because of stop losses and all of that. But sometimes I don't tend to. My max stop loss most times is always about whichever time frame. Max sometimes is maybe 20. So if we had used 20 on this guy, we'll make it 20. If we had used 20 on this guy, right, and target the recent low. This is the most recent low here. That would have given us a 1 to 8. Clean. All that matters for us to see all of this happen is what? Patience. Right from the daily, observing the markets, right from the daily to the 4 hours to the 1 hour, right? If we had wanted to do it, investigating, maybe we are really so free, like we are really on desk, looking at the market as the market was turning and all of that, we could probably have been catching what do you call it? We could probably have been catching some sales even right from this top, right? We could have been catching some sales even right from this top. But then, even if we don't catch any of the ones that had been happening right from here, maybe because it was not so clear, this was a clear guy enough for us. This guy was a clear guy enough for us. Right. Let's look at another. Let's look at another pair. Let's just have a random GBP AUD. Let's see. GBP AUD. We have less than 10 minutes anyways. So let's look at GBP AUD. This GBP AUD. On the line chart, market has been giving us series of what? A high, a low, higher high, higher low, higher high. Market came back, used this guy and inducement. Came. This guy didn't even close below. They are both. I think it was, so it came back here. With you. All of these, I don't even, all of these now, I don't do, I think it was before we used to do all of this whole thing, higher highs, higher low thing on higher time frame. But all of these are things that I don't really capture on the higher time frame, especially on the maybe monthly, weekly, daily. All I just do is how did market close? Market closure, market closure, market closure, market closure, market closure. Let's investigate. I would have, okay, let's see if we can investigate the most recent, since we just investigate this most recent guys that we have on the daily. What do we have here? We have this A-shaped key level. Look at this. Look at this. This is an A-shaped key level. Come to the line chart. Did you see that? A-shaped key level, right? A-shaped key level. And if we look at that A-shaped key level, what did market do? Market rejected here, closed. And what did it do again? Disrespected it to the upside, closed above. Immediately this market closed, this candle closed above this A-shaped key level. That's for the previous day. Then on Friday, I was on Thursday. And Friday, what the market? The market came back into that key level, pump, tapped into it, and became bullish. So for next week, or for next week, we are coming into with the way this market closed, market closure for this week. Look at previous week, it closed bullish above the previous week. I want to see buy on GBP AUD for the next week. I want to see buy for GBP USD for next week. Daily close bullish. What did 4 hours do? Did 4 hours give us a breakout? Look at this. Most recent breakout. 4 hours. Let me remove this guy. 4 hours did what? 4 hours gave us a breakout. And now 4 hours has given us a breakout. What do we have on 1 hour? Do we have a sweep? We don't have a sweep and a break, do we? Let me see. There is no sweep and break. Ah, there is. What am I saying? There is. What's this? What's this? Sweep. We have a sweep. Right? We have a sweep. And then we have a break. Not just one break, so two break. First break and then second break. So this tells us that truly we can be looking into buy opportunities. It does not necessarily mean that markets will now have to come back all to this point to buy. But now this has given us a confidence to know that whatever we are looking out for is we are looking out for how to engage in a buy opportunity on GBP AUD. So now, looking at the most recent reactions that we have, let's begin to now study all of these reactions we have been having from GBP AUD. Let's see. All of the reactions we have been having, we have this. Look at here now. V-shaped key level, right? Let's mark it out. Market came into it, tapped it, closed above. Next market came, closed above. But now this is where market had ended. But if we look at it very well, what do we have? Right, I'm seeing this guy here. Look at this inducement here. And just below this inducement leg, what do we have? we have this open close key level. Let's see what 30 minutes looks like. Maybe 30 minutes can be more clear. 30 minutes gave us a sweep and a break. Here we have a high, a low, a lower high, a lower low, a sweep and double break. Sweep and double break. But then all of these guys had been mitigated, right? This V-shaped key level. It had been mitigated. Look at V-shaped key level. This previous candle did not even touch it. The previous candle. So you use this previous candle as an inducement. This guy then tapped into it using this guy as an inducement. Then what came for the most recent high, which is this. Came onto this high was taken. Now that we have this high taken, what are we looking into next? External has been taken. What would I have been expecting? I want to see internal take. So the closest internal I can see now is this guy, because just below it is where we have an open close. So if I will be anticipating any buy on GBP now, because our story now has been giving us bullish scenario, I want to see market come into this open close key level, and then we can begin to look for an opportunity to run to the upside again. Does that mean market cannot still come as low as this point? Of course it can. But if market really wants to be bullish, then it will probably want to use the closest. So I'm more interested in the closest open close key level. This is more like a trade analysis for the coming week, right, on GBP AUD, right? So this is just the simple logic as to how I look at the market. Nothing complex. So if we see market coming into this zone, right, and then one thing we can decide to wait, right? On the 1 hour, we can decide to wait and see if market tap into this zone. Yes, if market taps into this open close key level, we can decide to wait for it to close. And if we can see it close above, maybe market came tapped into it, then market closed above it. Once we see a closure above it, we can come as low as 30 minutes or 15 minutes to now look out for some form of confirmation, maybe to give us a sweep and a break. Once we see any of those confirmation on the lower time frame, we can rest assured that we can catch that. And if we are catching it again, then we should be able to catch it up to our next external. Does that make any sense?
Yeah. To some extent, I understand. To some extent, I understand.
Yeah. So no problem. You always have access to the recordings. Of course, you always have access to the recordings, and you can always visit the recording at any time to go through this analysis. And of course, we'll still be having another call, subsequent ones, as the case may be, right? So I need to end this call now.
Okay. All right. I said, let me